Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Alex Blume, CEO of 2Prime, as well as Joe Dahl, General Counsel at Magic Eden. We're here to discuss how governments are thinking about digital assets as an economic strategy. It is great to have the both of you with us. Welcome back to Trade Talks, both former guests of the show. Let's kick it off. Joe, with a reminder, tell us, Magic Eden, where you sit within the digital asset ecosystem.
Yeah, certainly, Jill. My name is Joe Dahl, General Counsel of Magic Eden. We're one of the largest crypto apps in the world. We have a Bitcoin product, Solana product, the whole 9 yards. A lot of NFTs and meme coin trading.
All right, and 2Prime.
Yeah, I'm Alex Blume, the CEO of 2Prime. We are a algorithmic quantitative derivatives trading firm for Bitcoin and digital asset owners that want to own more of it, and we also offer Bitcoin secured loans. We're one of the largest Bitcoin secured dollar lenders in the world.
Yeah, it's really interesting, you know, Alex, when you think about how it has evolved the conversation just over the past year to 18 months, whether you're thinking about capital markets, how institutions are leveraging digital assets, and now governments are really jockeying and positioning in terms of how they're designing their economic strategy around a crypto-backed future.
Yeah, I think from a risk management perspective, even if Bitcoin has a 1% chance of becoming the new gold, that's a huge amount of wealth and potential value. It's already, you know, in the $2 trillion range, but if you're a risk manager and there's a 1% chance of a $50 trillion asset, well, 1% of 50 trillion is what, 500 billion? So maybe that makes sense to start, you know, managing or having some exposure to it. And so I think we're seeing, and I think the odds are more than 1%. I think we've seen moves by the US government and a lot of other competing governments that are making it more and more likely by the day, and it becomes kind of a self-fulfilling prophecy. Like if we're racing for it, then China starts racing for it, and Russia's racing for it, and it becomes it just through expectation in some way.
What about stablecoins, Joe? Is there a competition with that, or is this not where it's a one-size-fits-all solution and it's only Bitcoin reserves, or is there other, you know, multiple types of digital assets, a portfolio, if you will?
Yeah, Joe, I'm so happy you asked about stablecoins. We have a stablecoin bill that's in front of Congress right now. They hope to get done by August recess, so it's coming. And when this happens, Joe, we're looking at money market funds. That's a $13 trillion asset class potentially coming on chain, right? There's now rails for this. You've had a lot of big folks in the space. I think Fidelity is looking at offering like a stablecoin. I mean, you have major traditional financial actors looking to come into space in a big way. When that happens, you have a lot of liquidity coming on chain. When liquidity comes on chain, it can very easily flow into assets that are already on chain, like Bitcoin.
Yeah, it's okay.
I was gonna say, I think there's a lot of interesting questions around stable coins. For example, like if I take in $1 and make a stable coin, are there rules, like banks have rules around what I can put that dollar into? Does it have to be in treasuries, or can I buy Bitcoin with it? And I think also, from what I've read, you know, the government's pushing back on these stable coins bearing any yield to the holders, because it really could be disruptive to banks and other actors that are in the business of earning interest and providing interest for products. And so if we get a run on all of our banks and everybody moves into stable coins, you know, it's a big problem for a lot of vested interests.
But isn't there growth in staking and deriving yield off of that now anyway? Aren't the institutions looking at that strategy?
There's growth in, like, ETH staking, for example, which I believe the ETFs are going to allow ETH staking sometime soon. But you know, from what I've read, that specifically with, right now it's pretty much unregulated. There are stable coins that bear interest. The biggest one, Tether, does not. They keep all the interest themselves. But as we put it into formal law in the United States, we might see more restrictions on what those stablecoins can offer.
Yeah, which is so interesting when you think about having a framework around it, which certainly the industry is advocating for and welcoming, and balancing innovation versus stifling that. And I think what's interesting, you know, when it comes to digital assets in whatever form they are, that's the first time I think regulators are thinking innovation first, perhaps.
Which is very refreshing, by the way. I mean, this really sets the ground rules for all of us to come in and comply. We comply, we know the rules of the road, we can grow. That's really important. I want to get back to something that Alex mentioned.
Right.
We talked about native yield with stablecoins. So stablecoins have a very important purpose. They're dollars. They're dollars on chain. So if you want to move out of an asset, you can keep them in dollars. That's great. Instead of having the native asset, which can fluctuate in value, and have staking derived from that, which is yield essentially, you can have dollars, digital dollars on chain, generate asset yield for you. And this is a very innovative thing, and to Alex's point, this will be very disruptive for traditional financial players.
Right, but if you have Bitcoin as part of your reserves, I mean, that certainly does move more than some currency does. I mean, perhaps not like the US dollar, but you know, your balance sheet will change daily.
Oh yeah.
So
you see a lot of these stablecoins holding US treasuries. I think Tether, which I believe is by far the largest stablecoin, I believe is the 7th largest holder of U.S. Treasuries in the world, nation state level. So they have very robust balance sheets, these companies.
Yeah.
Yeah, I think they were the 7th largest buyer of new treasuries last quarter, including, nation states, but they're a huge, huge holder of them. And it's becoming increasingly a national security interest to make sure this is where these stablecoin dollars go, is into treasuries, and it's not into rubles or Bitcoin.
Yeah, well, so it's like you kind of have to balance the commercial business end of it and then what they're investing in. Would it be modeled off a traditional treasury model, if you will, or how will that function change? I mean, do we have the skill set at that level to put this portfolio together?
I think what you're going to my guess would be that you're going to see very conservative rules around the backing of those stable coins if the government's going to say, yeah, these are basically regulated dollars. And I think, like I was trying to say before, I think banks are going to want to limit what those stable coins can offer so that banks still have a purpose.
Yeah, well, it's interesting. It's almost like they're competing with their institutional offerings versus, because this is what they're trying, to get out there to firmly root themselves in the digital asset space. But it seems as if that competes a bit when it becomes, when you're thinking about it from a government perspective, and a reserve currency, as an example. Do we worry about the dollar going away? Is that reflective of, the run that we've seen in gold when people are thinking about what the reserves look like?
The run in gold is, I think, a very interesting point. But I think that actually the stablecoin legislation, having clear rules of the road and having a U.S. sanctioned or U.S. compliant stablecoin sets the pace for the U.S. dollar to sort of leapfrog everybody else. Because right now, you look at Nigeria, you look at Turkey, you look at Argentina. These countries that have a lot of local currency issues, a lot of them are holding stable coins, not Bitcoin. Bitcoin has a lot of holders, don't get me wrong.
Right.
But stable coins are stable. Bitcoin can fluctuate in value.
Right.
And if you're a small business, you need to have that stability. So stable coins are key. And some of these countries, Jill, have transfer restrictions around foreign currency asset flights. So they don't let people sort of transfer their local currency to foreign currencies. They have controls around that. Stablecoins, a lot of people do it immediately online. They're kind of a workaround for that. And with that, the U.S. dollar can sort of really land grab here.
Yeah.
And I think that's the reality for governments, even the United States, is this tech is in some ways unstoppable. People are going to buy Bitcoin whether or not you want to. People can make stable coins, and you can make some rules around it and either ride that wave and use it for your government's interest, but it's happening either way.
See, and I'm glad you brought that, the both of you, for bringing that point up, because we tend to think very U.S.-centric or Western European-centric because we have these legacy institutions that are in place. But the fact of the matter is, there's it's called a couple billion people around the world who are leveraging this infrastructure to grow micro economies, alternative sources of funding and capital formation, and this is how they're creating and growing economies. This is their only way to conduct commerce and make sure that the value that they have stays stable. So it's not just about where Bitcoin is, how it's trading, how meme coins, NFTs are performing. It really is the first and only ecosystem that they have.
Yeah, and there's nations where you can't be a woman and own a bank account, or you can't be young and own a bank account. I'm an investor in some crypto startups where the identities of the owners are just online, avatars, and it creates privacy and also, risks around that.
Right.
But the same was true early on with internet domains. People didn't want them to be encrypted because the government said something illegal is going to happen here, but we need to have privacy to some degree. And so, a lot of this allows you to move around governments, but also helps with, I think, individual human rights in a lot of countries.
Yeah, well, it certainly does. But again, there's always going to be that balance, Joe, where you want privacy. And of course, in the US and even in the EU, ownership of your data and protecting that data is such a big conversation. But at the end of the day, it can't be completely opaque, right?
Yeah, 100%, Jill. we need common sense regulations for crypto, and these are regulations that are informed by people in the industry that can work with the administration. We've seen a lot of that since this administration's come in.
Yeah.
And with those rules of the road, because we need rules of the road, we can't have. It should be something that is it's deplorable, it's not acceptable to have North Korea using crypto to launder funds. And we as industry actors should do what we can to support stopping that. But we should also do things that promote financial freedom, independence, privacy. So sort of navigating that nuance is really important. It's a breath of fresh air to see the White House,
right.
DC work with industry players to figure this out.
I'm sorry, go ahead, Alex.
Well, I was just going to add that I think also crypto forces the government to face some outdated rules around things like AML KYC that creates just these honeypots of data that get hacked all the time, and there are workarounds for all that stuff if you want to hide your identity or do something malicious. Accredited investor rules where if I have $1 million net worth, but someone else doesn't, but they actually created the product and made the code, they can't be an investor in a private investment. I think that not only is crypto putting pressure on governments to get involved with Bitcoin, but it's actually putting pressure on old, antiquated regulation overall.
I think we also have to acknowledge that there was a lot of excitement coming into, let's call it from the election results to inauguration day to where we are now. And yes, there's more uncertainty within the marketplace, but at the end of the day, even though policy is being spoken about, we have a crypto czar and where there's roundtables and it's a crypto-friendly administration. At the end of the day, execution is really what's going to matter, because there is, I don't want to say irrational exuberance, but there's a lot of hope that has run up into this, and it's been reflective.
Yeah, and execution's an interesting word because a lot of the changes have been by executive order.
Right,
but for
right.
any of this to really mean anything long term, real laws need to be passed by the legislative branch of government, and hopefully by August, there'll be a stablecoin rule, and hopefully we'll have a Bitcoin buying reserve plan for the government. But
which is interesting because digital assets is one of the things that there seems to be bipartisan support, or it's not as divisive as some other issues that the branches are contending with.
Oh yeah, arguably the saying in DC right now is that crypto is the only thing that's bipartisan, which is really nice, and not in the negative way, which is even better. But I think that we will get stablecoin legislation by the August recess. That seems almost certain. We just got a bill marked up today from the House, which looks about ready to go. Market structure is going to be the next big one. That's going to allow RIAs, traditional financial providers, dApps in the space, protocols, to all come in and register if they need to, or get the appropriate licensure. When that happens, stablecoins allow cash to come on chain in a meaningful, safe way that addresses some of these national security concerns we talked about. Market structure allows the industry to really thrive, because we know the rules of the road.
Yeah, that's what I'm excited about, more so than the next products that are being introduced. But once you get that catalyst of the U.S. getting the framework in place, because even though there are multiple frameworks around the world, at the end of the day, the U.S. not trying to talk about American exceptionalism, but we are going to be the ones that can scale it.
Scale it and just clear guidance on Bitcoin and stablecoins. If Google and Apple can allow you to natively hold these things on your phone in a compliant way, you've opened up almost the entire world to direct access to these things. And so just that distribution, when these companies have enough clarity to offer these products, which I think they do want to offer, is a game changer. I don't know if you need to do much more than that really to disrupt a lot.
Yeah, I still think, I don't know, I'm still concerned about some of the security issues because we have all of the, innovation in product, and there's regulatory framework that you want to get around it, and regulation by enforcement doesn't work for anyone. But I think we should also
works for getting Trump elected, that's about it.
But I think also having a cybersecurity first mindset is going to be important for this to be successful as well. Right, and it's not exclusive just to digital assets with nefarious behavior and so forth. I mean, do we stop trading stocks because of Madoff? No. Right. I mean, every 10, 15 years, there's going to be something that's gamed, and that's how you learn, and that's how you innovate. So, I mean, look at what happened in the markets just in the past 15, 20 years. I
mean, Jill, you're totally right. I mean, fraud is fraud. People always do it, unfortunately.
Yeah.
But the technology they use to do it can be made more and more robust against these kind of things. And blockchain is a safer thing. You can watch it real time as it's trading. You can keep track of these things. Madoff may have said, hey, money's coming in, money's coming out. But if it's on chain, you can watch it coming in and coming out.
Yeah.
You can check it yourself.
Yeah.
So decentralized players, FTX very similarly was a centralized player, like a Bernie Madoff. There was a black box in the middle there. Yeah. In a crypto world where it's peer-to-peer, where you can interact with someone directly, you have a full on-chain live vision of what's happening. And in that world, people can still try to fraud people and deceive folks, but it's a lot harder to do.
Yeah.
I think also there's some big trade-offs. Bitcoin, like gold, like whoever has it, you own it, right? There's no proof of an account or something like that, and that creates a lot of freedoms and a lot of ability to control your own wealth. But at the same time, especially as we get more into mainstream adoption, people aren't setting up their own private Bitcoin wallets and managing the keys. They're sending it to Fidelity, and at the end of the day, I like Fidelity, I trust Fidelity, right. But you're back at a centralized actor.
And we were talking about this off camera before. That was part of the issue with Web 2 versus Web 3 is that you have, let's call it 5, 6, big intermediaries that control the flow of the internet, right? As these things scale, it's a blessing and a curse, right? Because then you run into that dominant theme again, where there's someone who is serving as the intermediary. So what were we calling it before, the three?
Trilemma.
Right, so is it security, slowness, or scale?
And decentralization.
And decentralization.
Yeah, which is kind of like security. As it's more decentralized, it's more safe. When it's centralized, less people can cause bad actor issues to arise, so less safe.
So, but you can also tailor it to what you want, right? Like, so for example, I'd rather have things slow, but done right, and the security is there.
Yeah, that's Bitcoin. Highly decentralized. No one's going to crack that sucker. More centralized ones, you know, maybe one person behind it can change things around. And a lot of this market structure bill we're seeing come around is really focusing around this concept of control, where as control sort of cedes or goes away, you have more security, and that's a framework that we're seeing Washington really get behind, which is nice.
How are they thinking about it in terms of investor protection or consumer protection?
Yeah, I mean, we can get into Howie and all sorts of things.
Right.
The idea is that a lot of the 33 and 34 Act were built around principles of reducing information asymmetry. So making sure everyone has the same amount of information, can make their own rational decisions. Because a lot of times people hide information. It's not really shared with everybody. In a crypto world, in a blockchain world, all the information is on chain. You can all watch it real time. And if you are one of the parties involved, as long as you have sufficient disclosures, you can actually control the network that's happening. Suddenly, almost all the relevant information is either totally visible or being disclosed, and information asymmetries fall away. In that world, investor protection is more or less addressed in a large part.
Right. So it almost sounds like it would change the operations of a Fidelity, as an example, right?
Yeah, I think that's one of the big questions. Like, is crypto just a new way to make money and do what we've already been doing, or are we actually restructuring the way our economy flows?
Right.
And I think that's an open question. If we make every rule just to be like, this is how the way it works before, but now with Bitcoin, you just have a new asset.
But I think that goes back to the infrastructure conversation, right? Especially, I mean, it seems to be RWAs and tokenization is the path going forward, right? Especially when we start thinking about treasuries and those massive, multi-trillion-dollar markets. At some point, that's going to be where liquidity is sourced. That changes the calculus of the global capital markets, right? And you don't want to fall behind in that because, the U.S. is the top spot for capital markets. But if you think about it, and that push for tokenization, once you get custody and liquidity sourcing, that's when you start to see those structural shifts.
Yeah. I guess it's a question of what network that's built on and who's
But
in charge of
can it be, to wrap up here, we're almost out of time, that's how fast it goes. But Joe, does it have, like TradFi, you could pick your routes. You could pick different brokers. You could, list on different exchanges. Does it have to be one network when you think about, how market structure is evolving in the digital space?
Not yet. We are really in like the first or second inning.
Yeah.
I know that sounds crazy, and second inning is probably the Bitcoin ETF, but there's so much more to come. Stablecoins, cash coming online, the whole market coming online on chain. This is going to change how we do finance, how we run things in a major way. We're still so early.
Yeah.
And because of that, there's a lot of opportunity for sort of who's going to be the winner. Which of these chains will be sort of where all this stuff happens.
Yeah.
So.
All right, guys, appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.